All right, everybody. On this episode, Paul and I, we really cover the gamut of a few different things. One, we talk about politics a little bit at the beginning. So, if you're not interested in that, maybe fast forward 5 or 10 minutes. We talk about some feedback from a client on really the reasons he wanted dividend-paying whole life insurance for his children. And the fourth reason was for the purposes of infinite banking. There's a lot of other reasons people are looking to do this for themselves and their kids, that kind of outrank even the banking aspect of this. And then finally, we talk about the main meat of this episode is all about the word if. If your financial plan, your strategy ends in an if, as if, hey, this plan will work if I continue to get a high rate of return in my 401k, et cetera. Most plans are built on assumptions. And if your plan has an if in there, then is it really a plan? We're going to challenge you on that. Ask some questions to make you challenge your thinking on your plan. And is there a place for some guarantees and certainty in your plan? So I would argue that absolutely there is. So I hope you guys enjoy the episode. It's a little longer than usual, so stick with us, and we'll talk to you soon. Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. All right, Paul. Hey, man. Well, it's been a pretty eventful week, huh?
It's been a good week.
Yeah. So we're recording on November 8th, a couple days post-election. So it's amazing how many things have changed already in the world. With just a change of leadership, there's such an impact when leadership is put in place that it all starts at the top, really, right?
Clearly it does. I feel like, and this is not a political show, but just in general, we've been a rudderless ship in many aspects of, our. Whether it's national security policy, domestic policy, tax policy, whatever it may be, the threats of taxing capital gains, unrealized capital gains, or just world's on fire, whatever. And I think you're right. I think we need an effective executive, a vision, an America first, attitude. That's what the U.S. president is supposed to do. He's our country's leader, and that person should act accordingly.
Yeah. Why would we put any other country before our own? Because if we're not strong, we can't even help any other country.
Yeah, that's right. And
it's kind of like taking care of your own house first. I mean, if you can't take care of the say financial situation, financial security of your own home, how are you ever going to be in a position to help anybody else?
Yeah. I will say, when we run in, the same circles, that I've had some friends who I adore, who agree with me politically. And I think most people that listen to the show know how I am, know how we are. Not that you have to be our client, we have all kinds of clients, but, the inflation discussion. So if this is you and you're listening, the president doesn't control that. He can influence it through cutting spending, right? Because the money that the government spends is money that they borrow from the Federal Reserve. And that creates more currency, right? The Federal Reserve note in circulation. Yeah. That is the strict definition, according to the Austrian economists. That's inflation, which then leads to higher prices. So they're thinking, rates are going to go down, and they may, but not because Trump got elected.
No, it won't. And certainly, and the president doesn't have really control over how much money is spent. It's Congress.
It's Congress. That's right.
So this whole idea about eliminating the income tax, which I'm all for, because if anybody wants to know what your income taxes are actually used for, there's a little thing called the Grace Commission that Reagan established during his presidency in the 80s to find out what are our income taxes actually used for. And you know what the result of that Grace Commission was? 100% of income taxes collected were used to service the national debt. That's it. period. And that was national debt was less than $4 trillion at that time. It's like 35 trillion now. So do you think we have a lot more interest to service right now? You bet. I think income taxes make up like 24% of GDP now. It's outrageous. We could do without them.
Yeah, no question. U.S.
Because what would that do? If the government doesn't have the money to service debt, what do they have to do?
They have to they're going to borrow money to service the debt, or they're
Yeah.
going to raise taxes.
Right. But I mean, if they abolish income taxes, they have to stop spending money.
Oh, I see what you're saying. Yes.
Yeah.
Well,
Yeah.
absolutely. If they don't have money to spend, or they would just more than
Right.
likely just
Nobody's.
borrow.
Yeah. Yeah. But that's why I don't think there's a snowball's chance in hell of that happening, because Congress, on both sides of the aisle, nobody's gonna vote to eliminate their ability to spend money.
Yes, I'm going to get into, Trump has, I was watching an interview with him the other day, and this is, a tax policy thing. But prior to 1913, this country operated perfectly fine without an income tax. And he's like, how did we do it? And I haven't researched any of this, but he's like, we had tariffs.
Tariffs, right? Yeah, you're right. I haven't researched it enough to have a strong opinion, but I follow Peter Schiff.
Yep.
He's got a pretty strong opinion on that. He doesn't think that's going to be an effective measure.
Right.
That's
That's right.
This
I
day
think
and age.
I heard someone say this, that the strategic use of tariffs in certain situations can affect something. We're trying to change something, right? We're trying to change maybe China's behavior or
exactly
whoever, right?
Right.
And it could be used as kind of a stick, right? Well, here's the carrot, but if you don't do that, then we're going to give you the stick, which is a 25% tariff on everything coming
Right.
from your country, right? So,
Right, so-
I think the strategic use of it, and even just the threat of it, again, whether we agree with it or not, at least it's a communicated policy. It's a communicated idea that he's sharing with the American public. Like,
Yeah.
wow, what a concept.
And guess what? He doesn't have to use the military as his bargaining power, as his negotiation, hip pocket. Hey, I'll stick my military on you. That's what this administration currently is doing, because that's the only option they have. They don't have any other negotiating tools, because what did they do? They took away our ability to be energy independent. Trump's going to bring that back. And guess what? When America is energy independent, the rest of the country falls in line. The rest of the world falls in line. America is the only country, we make up 5% of the population in the world, use 20% of the oil, and we can produce enough oil to be profitable selling just to our own country. No other country in the world can do that. They cannot be profitable selling oil to their own citizens. Only we can. So we don't need anybody else.
We don't, and I think, and that's a stark difference between the two parties now in America, which doesn't make any sense. It's so silly. But I think the other thing is, and again, not to talk geopolitics or anything like that, but the use of soft power versus I guess hard power, if that's what they call it. I can't remember. I'm so far removed from academia, but I don't think this administration has. They thought they could use soft power in certain circumstances, and it's like with Mexico, for example, it just totally backfired. Where Trump is kind of holding their feet to the fire, like, hey, you guys need to do your part to stop the flow of illegal migration into our country, right? It's literally killing people, them literally. and us. We cannot. It is unsustainable. And personally, and some people may not like this, if all those people were going to be future Republicans, that border would be closed tomorrow.
100%.
I think that's. I would love someone to argue that, but I'm fairly certain I'm 100% correct.
Yeah.
Anyway, that being said, what are we talking about today? Other than
What are we talking about? Well, hey, I wanted to start with some client feedback real quick. I've got a client who has 3 kids, and he's getting whole life policies on all 3 kids. And one of the reasons that stoked this is that he's got, this has happened more than once, where a close friend has a child who's gotten sick or came down with a disease or even died, and they're uninsurable. You know, they get brain cancer or something like that, completely uninsurable, and that got him thinking, and he started thinking about life insurance, and you know, he wants to do infinite banking, but that was his like fourth reason for getting life insurance. He said, you know, one reason that comes before even the banking capabilities was the accelerated death benefit rider, which, you know, the ability to, actually it's the chronic illness rider is what he was really referencing.
Yep.
Which allows you to pull from your death benefit while you're alive to pay for long-term care costs, you know, when you're aging, when you're old, if you qualify for it. That was a big deal for him. So his kids don't go broke with medical expenses, you know, 70 years from now. So he's thinking way in the future. He wants the big death benefit in case the worst happens. He doesn't want his wife to have to go back to work. And they can get all the counseling they need and spend the time mourning and all that sad stuff nobody likes to think about, but that's a reality, you know? He wants to be able to build something for his kids that he can hand off to them when they're ready. He said he had a friend who, when he was 18, like inherited a big CD that had a lot of money from his grandparents or whatever, and he blew it on Coke. So he wasn't ready for it.
It's a lot of caffeine.
That's I don't think it was that kind of Coke. Not Coca-Cola, if you know what I mean. Yeah. But if he controls the policy, he gets to control when those kids take it over, if ever. You know, he can transition it to them whenever he wants to.
Yeah, so if you're listening to this episode, you know, those are some excellent reasons. And it's nice to get that client feedback. But, you know, we can start juvenile policies on your children for very little very little premium per year, about $1,000 a year. And you lock in their insurability because there's special riders we can add to it so they can buy more insurance as they enter adulthood without showing additional medical underwriting. So for you type 2 and type 1 diabetics out there that have children that are not type 1 or type 2 diabetics yet, this message is for you because we've already seen this with one of our great clients whose son has now become an insulin-dependent diabetic. But luckily, Dave did the policy work on this case, and that child now has the ability to buy more insurance as he enters adulthood, 10 years from now when he's 22 or whatever, in certain increments.
Yeah.
And he'll be able to do so freely without having to worry about a huge table rating. So that's really nice.
Yeah. Very nice. Yeah, absolutely. So that was just some feedback I wanted to share. It's pretty cool when you get somebody who's not all about, and he was like, I know this juvenile policy, I want it to have a lot of death benefit, so the cash value is not that important. So maybe it takes 15 years, 20 years to break even. He's like, I don't really care. There's a lot of other reasons I want this.
Yeah, there's too much in the infinite banking, not the infinite banking concept Nelson Nash world, but in the infinite banking world, which is different. There's so much discussion of when a policy goes cash on cash, meaning when your cash value that you have access to equals the premium you have paid. Nelson doesn't mention that in any of the pages as a consideration for why one would become their own banker. Not once. Yeah. It's not in there.
What does our good friend James say about the numbers? If
you don't know what the problem is, maybe?
If you don't understand the process, the numbers don't matter.
Yeah,
if you do understand the process, the numbers don't matter.
That's what he says. That's right. Brilliant. It's so brilliant. Really, the numbers don't matter, right? Yeah. And for juveniles, quite honestly, while we're on that subject, like our juvenile policies are all base.
Yeah, I've got.
Why not?
I've got one that's all base. The rest of them are heavily base.
Heavily base,
yeah.
Right.
Yeah.
I do them all base now. And my next kid ones on my own kids will be all base. And, that same guy also said that liquidity becomes less important as you go through the process of becoming your own banker. You've got those mature policies that are 5, 6, 7 years old, 15 years old, 30 years old. Your need for liquidity is less important, most likely. So an all-base policy may be on the table for you to expand your system.
Yeah, absolutely.
So, anyway.
Well, cool. So, all right. we're about halfway through the podcast now, and we're going to get to the meat. So
Maybe it'll
we may
be
go a
two.
little- we may be, yeah, it could be two, or maybe we'll just go a little bit longer on this one. But we really wanted to talk about, everybody, the traditional American way is to create this financial plan, get a financial advisor, have them create a plan. I'm going to invest this much. Hopefully I'm going to save this much as well. I'm going to pay off my house. I want to be self-insured by a certain age, etc. But that entire plan is built on assumptions, right? The assumption is you're going to get an 8% return in the market. You're going to work until you're 65. You're going to fund this much every year uninterrupted. You're going to pay off your house. Your kids are going to get through college, whatever. You're going to be able to do all this stuff. A lot of assumptions. But have you ever asked the question, what if? So if you're, what we're saying here is if your financial strategy, if your plan has an if at the end of it, you really have no plan. You've got a hope, not a plan.
Yep.
So, yeah, what are some of the ifs?
All right. Well, the first one we've got on our list here is if I can work through age 65.
And why 65? Like, where did that number come from?
Well, really, it's a. Well, I don't want to get into a discussion about like Bismarck and retirement
Yeah, I know, we
and
could
all that
digress.
stuff, but you can draw a good percentage or most of your Social Security benefits, like your annuity at that point is not quite the full value. I think it's at 67. And of course, that depends on the year you were born and all that stuff. I don't have all that memorized. It's readily available on Google search. But I think generally it's like, 65. I want to be retired, whatever that
It's
means.
because the government picked that number and we've been brainwashed to believe that's the retirement age. Everybody
Yeah.
thinks
Oh,
that.
yeah, no question.
Like, it's de facto. I'm
Right.
retiring at 65. Well, are you? I don't know.
And
Some of the happiest people I know work until the day they die.
Yep, the guy that's the salesman for my truck out there is 69 years old and plans on working another decade.
Yeah. Because he
Basically till
has
he's
to or
80.
because he wants to? That's the real
I don't think
question.
he has to. I think he's just.
Yeah.
I wanted to buy this vehicle for him, by the way. Like he was so
Yeah.
Southern
Isn't that fun
gentleman.
when you want to buy from somebody? Yeah.
Yes, he was great. Totally different from Northern Virginia. Northern Virginia people are just rude. I'm sorry. Like this place sucks. It does, and we're But anyway, yeah. So the idea of retirement in the age 65 or 62 and a half or 67, whatever it is, in case of your 401k, what is it? 73 for RMDs now, maybe. I think.
Yeah.
They keep moving it around. Yeah, that's all government crap.
It is. It's
all it is.
government propaganda designed to, and it starts in school. It starts in the worker factories that we call public education. So we could get completely off topic here and go down that rabbit hole, which I won't. But
Yeah, but it creates a limitation in mindset, though, a constraint. It constrains the mind, like. And then on this radio show that I talk about on the weekends that I listen to, where these people are like, their plan blows up and they're 65 and they have to continue to work because all these ifs, they were bad assumptions
yeah,
and it didn't work out.
they were assumptions. Assumptions could be just bad in themselves. Just the idea that you're building your entire future around not just one assumption, multiple assumptions.
Right.
Which
Like
we're
in the
gonna cover
military,
here.
when we did planning, right, Dave?
Yeah.
A good assumption was seen as a future fact. Like something we knew, right?
Yeah.
Like at
It was
300
called
miles.
intelligence.
Yeah.
Right.
Or analysis, right? Or
Yeah.
mission analysis. A good assumption would eventually be a fact, most likely.
Yeah.
So, but and there's too many variables in the market in life for something that's a plan that you make when you're 25. Things are going to change over that 40-year period,
Right.
dramatically. That are outside. Some are in your control, but most of them are outside influences that you don't control.
Yep. Right. Now what if my plan is, hey, I'm gonna be able to retire at this age with this much money if the market earns 8% every single year that I'm working and
Without
participating
interruption?
in the market. Without interruption.
All right. Yeah. So, so the odds of your personal portfolio, the typical American's portfolio, where they're dollar cost averaging into their 401k, into an IRA, of an actual return of 8% year over year compound is not going to occur. Some years you're going to earn 20%. Some years you're going to be down 20%.
Yep. Or more. As
Or
we've
more.
seen during our lifetime. Our working
So-
lifetime.
You can make a safer assumption by maybe cutting that 8% to 4. And I guarantee you, and this has been personal experience over analysis of hundreds of clients, that that is closer to the truth.
Yeah.
It really is. And I hate to say it. Everyone's like, oh, I'm doing so great. Like, and then my answer to them was, well, everybody is right now. Like, you're
Everybody
not
is,
doing
yeah.
anything. You're not doing anything. Like,
Yeah.
the market's just up, and it's way up.
Yeah.
So anyway, it's not going to go up forever.
That doesn't mean we're not saying you shouldn't be in the market. That could be a very viable
No.
part of your portfolio, right? The
Yep.
growth portion of your portfolio. But that shouldn't be the only place you're putting money for the future.
No, definitely put money there. I get plenty of clients that are big stock market people, dividend
Yeah.
stocks, and they have quite a some passive income off those dividend stocks, and they use it to pay premium.
Yeah. I mean,
which is great.
exactly. I mean, the advisor that we've had on this show a couple times now, Ryan Fleming, he puts his people's money to work in a brokerage account so that they can pay premium from their earnings.
Yep.
And it's a great thing. He's like, man, I still don't understand why you don't have money in the market. I'm like, yeah, I mean, I probably should have some writing on specific things to ride that way, but it's got to be money that I'm okay not having access to, and putting at risk. To be frank,
Yeah.
anything you put anywhere in the market is going to be at risk technically.
Well, we had Mr. Barry Dyke on, and I agree with him. Like the stock market is not meant to be an income producing thing. When we think about reliable income that you can count on year over year over year
Right.
over year, it's not that. You can try to make it that, and maybe some savvy people do, but generally speaking, for the typical person, that is not the place to have money. In your golden years, you need something that's guaranteed to provide you the income that you need. Like my in-laws,
Yep.
they have an annuity. It pays them an income every month, and they don't really touch it really. But there it is. It's a
Yeah.
the engine blew up on the Camaro. All right, well, we've got money, we can replace it or fix it or whatever. So
Guarantees is part of your portfolio, and that's
right.
obviously where dividend paying whole life insurance comes into play.
right.
What if my plan will succeed? If there are no major downturns in the market over the next 30 years while I'm working, and then also over the next 20 years while I'm retired. What happened in 2008 when all these people in retirement years all of a sudden lost 30-40% of their portfolio while they're retired? Yikes, man. I mean,
Ouch.
trying to get back into the workforce when you're already retired, that seems like a pretty difficult obstacle.
Yeah, I don't know if there's any data out there, but anecdotally, a lot of people had to go back to work.
Yeah, and who's going to hire a 65-year-old when they could hire a 35 or 40-year-old?
Yeah, or even,
I mean-
or in some cases, Dave, they were older, like in their
70.
70s.
Yeah, who's going to?
80s.
Yeah, are you really going to hire a 70-year-old who's been out of the workforce for 5 years or more?
Could be a greeter at Walmart or something.
And that's what a lot of them did, unfortunately.
Yeah.
Yeah. So, what about if tax rates remain the same or they go down, then my plan will be fine. Do they ever
Well-
take into account that these tax rates, which direction are they going to go? Unless, of course, like we talked at the beginning, we eliminate the income tax system and move on. But barring that,
Gosh,
what's
that
gonna
would be
happen?
amazing.
Yeah.
But no, right. We don't know what the tax rates are going to be. We've talked about this all the time. There's a lot of people that are told as part of their financial plan that don't worry, you'll be in a lower tax bracket. That's very, very common to hear in the financial planning space. Although I tell you, my financial advisor never told me that. She's like, you have no idea what tax rates are going to be. So kudos to her for giving me the right
Yeah.
the right advice back then, even when I had no money. But we already saw with this election, the Trump tax cuts from a couple of years ago were going to sunset.
They were going to sunset after next year.
Right.
Right.
Right. They were going to sunset. That was going to take money out of everybody's pockets. And don't believe the propaganda. That wasn't a tax cut for the rich. I hate when they say that. It's a lie.
It's a flat out lie.
It's a lie.
And it's only because people don't want to educate themselves on the truth. There's a book right here. I've got it up there. Taxes Have Consequences. It's a
Is that
big book.
Is that Art Laffer? No. Who is that?
Yep, Art Laffer.
Yeah.
Taxes Have
I've got that book.
Consequences. I know. I told Tammy to get it for you. She
You
texted
did.
me. She was like, "Do you have any book recommendations for Paul for your birthday or
It's
something?"
actually
So,
it's on my I think it's on my bedside table.
yeah. But if you want some hard data,
Yeah.
truth data, read a book. And formulate your own opinion from actual data and research, not just some stupid talking point that some idiot says to try to get your vote.
I'm an idiot with a degree in journalism. Sorry, I had to say it.
So what if my plan will succeed if I don't lose my job?
Talking to a guy yesterday, I was actually used a referral, and I was following up with him, and he just started a new job. So for a while because I hadn't heard from him, and I was like, he seemed really motivated at the beginning. Well, he was between jobs, and but he did write back and said, "Hey, Paul, I just started a new job. I want to do this. I will do it. I just need some stabilization time." So
Yeah.
so that happens all the time. We are used to being around government. Especially me. I've been active duty military for my entire 22-year career.
Mm-hmm.
And generally speaking, the government service, federal, and maybe even state as well, is very steady work. It used to be like the kind of the low-paying, good benefits job. Now it's the good benefits, also high-paying job, and almost impossible to get fired from job. It's
until Elon takes over.
If he's going to be like the Bobs from Office Space, what would you say you do here?
Exactly. And he's like, I can invent an algorithm or a robot to take that job. See you later. Which is another thing what if technology, as long as technology doesn't replace your job, how many jobs will be replaced by technology, which throughout history has actually increased the number of jobs, but in the short term, it eliminates a lot of jobs.
It does.
Yeah.
But over time, machinery, and technology helps increase a human's productivity. Right?
Yeah.
Like the cotton gin with Eli Whitney.
Yeah, or the automobile, Henry Ford.
Automobile.
How many people in the horse and carriage business wanted that to fail? But look at all the jobs that's created now.
Right.
I mean, without the automobile, what would you do for work? How would this country have ever expanded? I mean, so again,
Yeah.
it's short-sighted. So if you think long range, like Nelson says, he wasn't saying that just about whole life insurance and infinite banking. He was saying about everything. Think
everything.
long range.
Think long range.
Yeah.
Yeah. Oh, that's a great point.
How about this one? This is one of my favorite ones. Hey, this plan is going to succeed if they don't change the rules on my qualified plan that they created, and they've already changed the rules on since I've had it. As long as they don't change any more rules, my plan will be okay.
Yeah. Well, we saw just in the last 4 years, since 2020, we've seen now several changes to 401k rules and other things. Before that, inherited IRA rules were up and we're all over the place and did change. And of course, it's not. And folks, it's never a change to benefit you. You might think it is, but it's not.
Yeah.
It's not.
I don't know.
The
The only
401k
one I can
general.
think of is like the RMDs. They made it 1 year later.
1 year later, which I guess helps.
Which helps, but I don't know this for certain, but I bet the calculation changed so that you're starting a year later, they're going to want more money.
More. Yeah,
At
I
that
haven't
point.
dug too deep, but that's a good point. Maybe they did add a couple of points there, right?
Yeah, maybe. So, but yeah, you're right. anyway, what if everybody has their house? They want to pay their house off before they retire. I think that's a noble goal. Go for it.
Sure.
I may not do that. That doesn't mean it's not a good thing. Like, peace of mind is huge, and having that peace of mind that, hey, taxes may go up on my property, but at least I don't have a mortgage. Okay, I get it.
Yep.
So my plan will succeed if my house is paid off, and if my house appreciates, and if I can access that that equity in my home. That's a big if that we've seen recently.
Yeah, no question. I was talking to somebody the other day that has a HELOC and uses it actually pretty advanced, like kind of a velocity banking strategy, but he actually has a first position HELOC mortgage, like basically.
Yeah.
And I was like, wow, that's great. Like, I was actually asking, where did you get that?
Yeah. I mean, that's cool. It could also be called an all-in-one mortgage or principal-only mortgage.
Principal-only mortgage, sure.
Yeah. So that's certainly worth looking into.
But, on a personal note, I like the idea of people having access to home equity, but it's not in the walls of the house. You listen to this podcast enough, you know what I'm saying. Personally, I'm just going to keep refinancing this retirement home that we're building when it makes sense to.
When it makes sense.
And I'm just going to pull the cash out. So if rates, for example, I'll give you a real world example. I'm at 6.5% on that 30-year note. If rates drop to 4.5% or 5%, I'm probably going to do a refi. I'm probably going to pull some cash out.
Mm-hmm.
I'll probably try to keep my payment roughly the same, maybe drop it a little bit, but pull some cash out, right? And that means I'm moving equity from the walls of the home where it's locked up into a place that only I control.
Yeah.
Right. And then by doing so over time, I'm maintaining the ability to pay off the mortgage, but without actually paying it off. I'm just keeping the equity in my whole life insurance policies instead, which is a better place to put it.
Like we say all the time, having the ability to pay off your house or having your house paid off, it's the exact same thing. It should provide the exact same peace of mind. I can pay it off at any moment.
Right.
I just choose not to.
I want to have the options, the flexibility,
right,
the liquidity to do what. Because again, the future's unknown, right? I need to think long range, and that I think by doing so and keeping control of as much of that capital as possible. Mm-hmm. And again, this is a huge mindset switch, folks. Right? Like nobody thinks like this outside really the IBC world, quite honestly. But it's something to consider. Really think about it. What's the difference?
Yeah, it's all about the way you think. Somebody very wise said that once. What if, my plan will succeed if inflation comes back down to 2%.
What does that mean? Like,
I don't know. Why is that the target anyway,
I just hate the American people are not being told anything that's great, because it's like it's a snapshot in time comparison. All right, 12 months ago, whatever, now it's compared to that moment in time, inflation's 2%. Yes, but the preceding 4 years, inflation was 40% or 60%. And they flush that out and get rid of that fact, saying, hey, just so you know, the purchasing power of the US dollar, just in the real estate market, on average, in this country, the value of the dollar lost 60% of its value, or I'm making these numbers up, but 40% of its value, whatever. We've seen houses double in price in some areas of the country, right, in a short amount of time. Well, inflation's not 2%. Sorry.
Yeah.
You need to do a longer time frame. What did House A over here in my neighborhood? These houses were $500,000 probably 6 years ago.
You know who's really benefiting from all of this? Baby boomers. They're getting wealthy, and the younger generation is getting poorer. Because baby boomers, they get to take advantage of all the stocks they had built up that have shot through the roof. They get to take advantage of that house they bought for $30,000 30 years ago, and now it's worth $300,000. But what's it done to the younger generation? There's no way in hell a 20-year-old is going to be able to buy a house these days for another 15 years.
So I live in I would say a middle class neighborhood, right? 2,000 to high, 2,800 square foot homes, normal 3-4 bedroom, whatever. The house across the street from me is under contract for $887. Original owner, he bought it in 1977 for 60 grand
Wow.
or whatever, 50 grand, whatever it was.
Yeah.
And now that house is 887, but just a few years ago, again, that house was 600.
Yep.
Just a few years ago.
Right. So it's great for older people. Like they're getting wealthier and wealthier by the minute, it seems. And not to their own fault. It's not their fault.
No.
But I don't think they understand how the benefits to them is actually working in reverse for the younger generations. They don't see it.
Yeah, I don't know how many young people, young couples just starting out could go over here and do a 30-year note. I mean, that house would be $6,000 a month.
Yeah. Yeah.
Just the
I know, right?
mortgage.
Yeah. Right. Okay. How about these? What if, it'll work as long as, if Social Security is still around.
Well, it's templated to run out of money here in 2033, I think.
I think the fact is there actually is no money.
There's no
It's
money.
borrowed-
There's
it's
no
borrowed
money
money.
anyway. Right. The FDIC has no money. The Social Security Fund has no money. It's it's monopoly money, isn't it, Dave? It's fiat
Yeah.
currency, fake money.
That's backed by, you know what? Another reason I don't think the government won't be able to borrow money is if they get rid of income taxes is because our money is backed by
Our
the
productivity.
citizens of this country, our productivity,
Right.
and the fact that we're going to continue paying taxes. So once that backing is gone, yeah, forget it. Okay, my plan will work if medical expenses don't wipe me out. If I don't get sick and I have to whittle down all my assets to what, $5,000 is it for Medicaid or something like that, or $2,000, and then government assistance kicks in?
Yeah, I think you basically become broke, more
You
or
do.
less, and then, yes, Medicare will kick in or whatever, and that's not. That's not a plan. None of us are
That's
going
not
to
a
get
plan.
healthier as we get older. You're just going to get sicker.
And Medicare should not be a plan.
No, that's not a plan. Social
Government
Security's not a
assistance
plan.
should not be a plan. How did that plan work out for everybody on the East Coast who just experienced Hurricane Helena, and they were expecting FEMA to come rescue them? How did that work out for everybody?
Yeah, it's never going to work out.
It didn't.
No.
Thank God we live in America,
Yep.
and the fabric of America is still helping your
Giving-
brothers out.
Yeah, that's right.
Yeah. Still the most generous nation on earth.
Yeah, I think, someone, when I first got into this business, I heard someone say, maybe at a think tank, kind of, when you're talking to clients, begin with the end in mind, I think is what they said. What does it look like when you're 90? What is the ideal scenario? And then you back plan from there and try to create that. How do you guarantee that scenario plays out without assumptions? Like, what is the value of having certainty in that plan so that it will occur, and it can be done.
Yeah. Here's another big what if. What if, my plan will succeed if my children don't ever need my help once they move out of my house and, head off to college or go live on their own, go to the military. What if they never, as long as they never need my help? I tell you what, if your children need help, you're going to want to help them. And that could be something completely out of their control, like a sickness, a car accident, something. Does your financial plan take into account that, the unknowns?
Yeah. So again, this happens all the time, and I think a lot of people with maybe young adult children can relate. Sometimes your young adult children end up back in your home for whatever reason. Maybe they got divorced, they hooked up with the wrong partner, and it just didn't work out, and it destroyed their life temporarily. Or
They spent $100,000 at college and realized they couldn't get a job making more than $46,000 a year, and they can't afford.
turns
an
out that
apartment.
gender studies degree is only good for teaching that crap to somebody else.
Yep, it's like hieroglyphics. It's kept alive just so it can be taught to somebody else, and
But talking to them last night, they've got a 25-year-old son on the payroll still.
wow, yeah,
And, gosh, I was a lieutenant in Korea flying Apaches at that age,
Same.
paying my own bills. Because they were like, yeah, our cell phone bill is $500 a month. And I was like, whoa.
You need to go to cricket or something
like,
that.
y'all need to, yeah, you all need to go. Anyway, so yeah, hopefully they hear that and they can smile, but because they know I'm talking about them. But yeah, let's let's help, but not we're not. You ask my kids, right? Yeah, you can live here. Rent's due on the first.
Yep.
Sorry.
Yeah, but it would be cool to be able to have the capital to help them out. Maybe
That's right.
Buy an investment property, let them live in it, fix it up for you, lease to own it, because they're not getting a mortgage. No bank's going to lend them money.
Right.
They'll lend them money for college. With zero experience, zero idea of what they want to do in life, and no track record to speak of, they'll give them money for that, but not to go buy a house.
I'm glad you said that, Dave. There's so many just creative ways to kind of tackle a financial problem and, benefit yourself and benefit the person you're trying to help all at the same time.
Yeah.
Like, I think that's brilliant. Gets them back on their feet, helps you. I told my kids, they don't really know this, but if they were doing that and paying me rent, that rent money is going to benefit them in some way.
Sure. And maybe that's just money that you pocket. You fund a policy for them, and then when they finally move out, you say, hey, good job paying your rent and being, responsible. Here you go. Here's it back, because maybe I don't need it.
Right.
And I'm going to set you up for the future. But hey, I made you pay that, and use discipline and all that. So I don't know, so many different ways to crack the nut, but that's where whole life insurance comes in, where you can add guarantees, you can add certainty to your portfolio. We're not saying don't be in the market. Be in the market, man. Buy a house. Let it appreciate. Hopefully all that stuff works out. Chances are it will, to at least a certain degree. Maybe not as great as you think, but also have certainty.
Yeah, just ask yourself a simple question, right? What part of your plan has certainty and guarantees in it?
Yeah, there you go. Ask your advisor, what part of my plan has guarantees? Please tell me.
None of it.
None of it. Yeah, unless they're a solid advisor like the one we've had on the show, who completely, 100% backs the idea of them having certainty in their portfolio, even if it takes money out of, out from under his management.
Yeah, that's someone who's, and the fiduciary term gets thrown a lot out in the wide world, but, he's actually acting in a fiduciary capacity, because he's doing what he thinks is best in his professional opinion, and it's a fact, of course. Yep. So yeah, and that's why we work with people like him.
Yeah, exactly. Well, all right, we've gone a little over time this week, but I hope everybody enjoyed it, got something out of it, and stuck through to the end. Any parting shots?
No, I do have one for military people, kids going to college, post 9/11 GI Bill. Let me tell you what I'm doing, because they get those benefits, Dave. They get like BAH, so it's like an E5,
like
and they get
E4
some
pay
other,
or E5 pay or something.
yeah,
like
E5,
that.
BAH, and some other stuff, right?
Yeah.
That cash is coming to me.
Oh yeah. Yeah, you bet.
And it will be, but to their benefit, for benefit of, under my control, for benefit of them. I'm going to use it to pay premium, either on my life, Tammy's life, or their life.
There you go.
But it will benefit them in some way, right? So anyway, just a little parting shot, just for a real life scenario of, that's what I'm actually going to do. They're not getting that $2,000 a month. Are you crazy?
Yeah, I'm the one that earned that. However, I will say our kids earned it too. If we were gone for parts of the years
of their life, moving
years
around,
of their life, they earned it.
No doubt.
I'm happy to pass that on to them, because I didn't use it, and I want them to use it. But I think that's a great idea, man. Pocket that money, put it into premium, and maybe at the end of the day, when they graduate, be like, hey, here you go. Here's a gift to get started.
Huge graduation gift,
How cool
something
that.
Yeah. And that's my plan. Here you go.
Yeah.
Congratulations, great job.
Awesome, man. Well, hey, good talking to you, good catching up, and hope everybody has a great, beautiful November week. And we'll see you all back here next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.